and thank you for watching Dukascopy TV. I'm Monica Gibson and I'm joined in the studio by Bruno Estier. We're going to be having a market review from a technical perspective. Bruno, thank you very much for coming in once again.
Hello, Monica.
Now, last week we spoke about the VIX and it's quite a high level, but we're going to be seeing today that a lower VIX can really continue the rebound with the S&P and some other stocks. So can you start off by telling us a bit about that, please?
Yes, sure. If we look at the first chart, what we noticed, as you mentioned, is that the VIX stopped below the magic 20% level and moved back down toward 17 and recently all the way down to about 15%. On the charts, we noticed that we have horizontal lines, one at 15% and another one around 19 and 20%. We are back at the low on the floor, basically. So from here, we will not expect too much lower VIX for the coming days. We probably have a rebound, but a small rebound, and it will stay also within a normal range. A normal range would be a level below the 20%. That means something between 13.5%, 14%, and on the upside, 17 to 18%. We'll see that what impact it has on the S&P 500. There we again have the S&P 500 with on the top part in orange we have the VIX, which has been coming off, and as the VIX was coming off, the S&P is rebounding since June 24. Now we have two blue lines on this chart, one rising trend lines from 1485 in March, joining also the low of June 24, and we have one descending trend line which is joining the highs. We just passed yesterday the resistance trend line, which is the ceiling at 1631, and we are pushing up towards 1640. And we remember this 1640 is an important level. It is also not so far from the previous high, 10 points higher, 1650, but it is also now at the level of the clouds. The cloud is this little green movement that is below the price, which has been broken quickly, and price action has been able to remove above it. And we have then on the coming weeks something a bit daring, which is basically what we expect as a normal scenario for the coming weeks. Namely, a retest of the high somewhere between 1687 and maybe a bit higher, but we don't know yet. So we'll take a conservative approach of mentioning 1687 on the chart. Then probably in August a pullback, then a second test, a rebound, and then we'll come to the difficult part, but we'll discuss that much later in the fall.
But that is your preferred case, but how can you be sure that this is going to be the resistance level that will be tested?
We have on the next chart some indication about the breadth of the market. The breadth of the market is a measure of all the stocks, not only the few large cap stocks which are represented by the S&P 500. Here we have the Russell 2000, which are the small cap stocks. And there we notice something very interesting, because now we are making a new high above the recent high of May. That means that there is broad participation of all the small stocks in the bull market. So that tends to be bullish, a bullish factor, and therefore will tend to support the bullish view on the short term as well.
Okay.
In contrast to that, if we look at the next chart, we have Europe. And the Euro Stoxx chart presented here, and we see here that we are still hovering near a key level, 2660 on the Euro Stoxx, and we have not yet really confirmed a move above that. And also because we have in the dotted black line on the top still a movement of a downtrend, which is the relative strength of the Euro Stoxx versus the S&P 500, we really do not have yet as much performance on the Euro Stoxx as we saw on the S&P 500, and that's why we are having just made about 50%, but not even on the Euro Stoxx. Another market which is doing well, but differently from Euro Stoxx is on the next chart, the Nikkei.
And this is something we've looked at in the past as well, so how it's doing?
You remember that we had long-term cloud charts on a quarterly basis with a level at 15,200. We had on a monthly basis a support, a floor at 12,600. And in fact, we had made a low in June around 12,400. Okay, so it's validated, it's a nice low, it's a rebound. And now the rebound could find some resistance. That means it could stop there for a little while, make a pause near the level of 14,600 or 700, probably for a few weeks, and then continue up. But the positive thing for the Nikkei versus the Euro Stoxx is to compare the Nikkei to the S&P 500. And on the dotted line on the top part of the channel, since June 17, the dotted line is rising, making new highs, and that means that the Nikkei is outperforming the S&P 500. And we notice that also in intermarket correlation, because we notice also the yen has been weak recently in the last 2 weeks.
It's certainly something very interesting and has such a different effect on other markets and the currencies and the different stocks. But Bruno, thank you very much for coming in once again and talking it through, trying to make it all a little bit clearer for us. But thank you, Bruno. It's been a pleasure having you here. Thank you. Well, that's all from Bruno and myself for the moment. Click back to Dukascopy TV for the hourly updates and, of course, today's press review. Goodbye for now.